As a limited company director or an owner of a small business, you might ask yourself what level of salary you should be taking this year from your company. I had a few recent meetings with my clients to discuss this, and then I thought it might be worth to record a video on this, and hopefully it's going to help you to understand what level of salary you should be taking this year as a company director or a small business owner. First of all, let's quickly cover some main topics or concepts and rates before diving into main tax planning part. So the first one is national insurance contribution. It is not a tax. However, it is considered as a compulsory contribution once you start earning over a certain threshold. So it does work in a similar way like an income tax. So there are three main components of national insurance you should be aware of. The first one is lower earnings limit of 6,500, which means you must earn at least this amount to qualify for certain state benefits like state pension. In 2024-25 tax year, it was 6,396 pounds. When we then got primary threshold, which is 12,570 pounds. Once you as an employee start earning over this threshold, you need to pay national insurance contribution. And finally, secondary threshold is 5,000 pounds, which means once you start earning over this amount, your employer needs to start paying a national insurance contribution, and that used to be 9,100 pounds. This is one of the biggest changes we have saw this year, and of course in this budget. In simple, your employer needs to pay a higher national insurance when you start earning over a certain threshold, and since the threshold is low, so your employer will be making a higher national insurance contribution on your behalf. And then we got employer allowance, which is 10,500 pounds. This used to be 5,000 pounds. On the one hand, government reduces the threshold for NI, and on the other hand, they have increased the employment allowance, which will offset the effect to the certain limit. Now let's quickly go through income tax. The bands and rates, including the personal allowance, hasn't been changed this tax year, which means people are earning slightly more due to inflation, but bands and rates are still the same and paying the same income tax on the level of incomes. I have explained NI and income tax in this video, how the UK tax system works, a practical overview. If you haven't watched it yet, then please do watch. A quick reminder here, up to 12,570 pounds, you don't need to pay any tax because this is covered by your personal allowance, which is 12,570 pounds. The next part is basic tax rate, which is from 12,570 pounds up till 50,270 pounds. On this, in between this amount, you need to pay 20% tax. And then we got a higher tax band rate, which starts from 50,271 pound till 125,140 pound. On this amount or in between this amount, you need to pay 40% tax. And then anything over and above 125,140 pound, you need to pay 45% tax, which considered as an additional tax band rate. And finally, your personal allowance will start tapering once you cross threshold of 100,000. For every £2 over and above this threshold, your personal allowance will be tapered by £1, which means once you reach 125,140 pound, your personal allowance will be nil. I have explained this in my previous video, how to reduce your tax bill if you earn 100k, UK tax planning for higher earners. Then we have dividends. The tax rates bands are same as income tax, but rates for dividends are changed. Up to £12,570, you don't need to pay any dividends, and for basic rate, band rates are 8.75%, and for higher rates, the rates are 33.75%, and then 39.35% for additional rate band. And then moving to companies are paying a corporation tax at 19% on the profits up till £50,000, and anything in between £50,000 and £250,000, the corporation tax rates are charging at a marginal rate, and anything over and above £250,000, a quarter million, the corporation tax rate will be 25%. Now let's have a look on optimal salary remuneration package for directors in 24-25 tax year. And in my opinion, backed by calculations, an optimal salary package is £12,570. The reason why I take this salary is because this is over and above lower earning limits of £6,500, which means once you cross this threshold, you are eligible for certain state benefits, including state pension. Plus, being a business owner, you need to understand with a salary package, it is deductible for a corporation tax, which means you are getting a corporation tax relief on your salary. Now, let's have a look on calculations. On this salary, you don't need to pay any income tax nor employee national insurance because you are within personal allowance and national insurance threshold of £12,570. However, company does have to pay national insurance, and it is much higher than last year since secondary threshold gone down to £5,000 from £9,100. And the other thing has changed is NI rates, which gone from 13.8% to 15%. On your screen, you can see now NI payable by the company is £1,135 and 50 pence, whereas before it was £478 and 86 pence. You might be now thinking that why should not you take a lower salary to qualify for state benefits? This is because, as discussed before, salary is a tax deductible expense, plus national insurance is a tax deductible benefit, which is you will get a corporation tax relief on these two expenses. So that's why the optimal salary which I am recommending you is £12,570, which is obviously backed by calculations. Just to show you how that's work, let's compare the NI deduction the company would get for the difference between £5,000 and £12,570 with the NI liability of the company. First of all, the company will receive a corporation tax deductions for NI paid for you of £1,135 and 50 pence on £12,570, and 19% of this payment is £215 and 75 pence. And secondly, a company receive a deductions on your full salary between £5,000 and £12,570. It's £7,570, and at 19% company will receive a corporation tax deductions of £1,438. So the total additional corporation tax deductions the company will receive for that element between £5,000 and £12,570 is £1,654 and 5 pence. That offsets the company's national insurance liability of £1,135 and 50 pence, which paid on your salary of £12,570. So that's why £12,570 is an optimal salary package for 24-25 tax year, because there is no income tax on this level of salary. Your salary will be a tax deductible expense for corporation tax purposes, and your employer NI will be a corporation tax deductible expense. And it is also why you don't have to pay a huge level of dividends to yourself, because dividends are not tax deductible expense, and you will miss out these corporation tax benefits if you pay a huge dividends instead of a optimal remuneration package. But we will cover this shortly, so stay tuned. A quick ask for me before we cover our dividends: if you like my this video, my previous videos, or overall my channel, so please do not try to share it with your friends, family, and colleagues. It will be a big thank you for me. So now, next question, and of course a big question, is how much dividends you should take, because salary of 12,570 pound, which is around 1,000 pound per month, won't cover your living cost. So anything over and above will be in form of dividends. Dividends don't receive a same corporation tax benefits like salaries do, because dividends are declared post tax profits. On top of this, you do have a 500 pound tax free dividend allowance. It used to be higher. Around 8 years ago it was 5,000 pound, but it has been gradually decreasing. With that said, you can take 500 pound as tax free, and then 8.75% dividend rate apply, which means you can take further 37,700, on which 3,250 pound tax will be payable. So now let's quickly wrap up and see how much you need to pay a tax, both personally and through a company, on your remuneration package of 50,270 pounds. You have extracted a salary of 12,570 pounds and a dividends of 37,700 pounds, on which you have paid income tax of 3,255 pounds. The company has paid a NI of 1,135 pound and 50 pence, but at the same time company also received a corporation tax deduction of 1,654 pound and 5 pence for salary and NI, and company also paid corporation tax of 7,163 pound on dividends which you as a director extracted from the company, since you know dividends declared from post tax profits. So in total, you as a company director paid a tax of 9,899 pound and 45 pence on a remuneration of 50,270 pound. So before I say a goodbye, I have uploaded a video on optimal remuneration package which you must watch, and I'm sure it will help you to understand which components you must consider for your optimal remuneration package. As I earlier mentioned, if you feel like this video or any of my previous videos or overall my channel will help you, any of your friends, colleagues, or your family members, then please do not try to share it with them. It will be a huge thank you for me. As always, hand ahead, salute, until the next video.